So today we are doing my M1 Finance update. We're going to be taking a look at my portfolio, see how it's grown over like the last week or so, some of the things I've invested in, and check out to see if I got any dividends this week as well too, because I love getting paid out those dividends. So without waiting too much, let's go ahead and hop onto my portfolio and kind of take a look at everything that's going on here. Now, for those that might not be familiar, I am using M1 Finance, which is the investing app that I love to use. I'll have a link for them in the show notes if you want to check them out. It does help support out the channel, but it also does get you started with investing, which is what I absolutely love to hear. So if you guys want to check that out, check that link out in the show notes down below. But with that being said, let's take a look here. So right now, my current value on my portfolio is sitting at $12,847, which is pretty incredible. I mean, if you look at this value over time chart right over here, you can see we started back. It says January 23rd, 2019, with $100.09, and a little over a year and a half later, actually a little over a year and a half later, $12,847. So quite a bit has been going on this portfolio. Obviously, a lot of that has to do with just constantly investing. Over time, I got more comfortable, so I started adding more in. And you can see in my all-time right now, for my gains, has been $1,163.22. Now, that is money-weighted returns, which means I might have sold some stuff for a profit and then kept it into the account. So for those that are wondering what my current unrealized gains are, it's $651.72. Quite a bit of a drop over the last couple of weeks with everything going on inside of the market. I think if we look at the last month, if I go back here, you can see I'm still down almost $300 overall on my gains here. So, I know the tech industry has been taking a big hit. You can see here under my tech pie, we're down almost $180. My growth down about $28, and then my VOOG, which is my growth ETF, which is also a lot of tech companies, is down $73.82 for the last month. But no worries there. I'm just dollar cost averaging for myself when I can. So you can see here in my tech pie, I have Apple, Microsoft, and AT&T. So right now I've been buying a lot more into Apple and Microsoft. If I go to my activities here, I've done quite a few actually. You can see here 2 days in a row I was doing some more investing. So if I go in here, you can see here I did some Amazon. Let's see, what else did I do? I did my Apple, I did my Microsoft. These ones were a little bit lower, but overall I think the day before I did a little bit higher with Microsoft and Apple. So if I go back in here and take a look right now, you can see, Microsoft I did 25, Apple I did 35. So I've been investing a lot more heavily into them, trying to build up my number of shares, because right now, if I look over here, with Apple, I have almost 12 shares because M1 Finance allows you to do fractional shares. I'm still up about 12.8% on them, but I've been buying in a lot because I think it was, actually, let me take a look here. So on seekingalpha.com, if I go take a look here, if I'm not mistaken, there was an article that I was reading, and it said that Apple had dropped like 22%. So you can see like from their high here and then where they're at now. They dropped pretty significantly over just the last about month or so. Yeah, about the last month or so. It's obviously coming back up here a little bit, but that was a pretty huge drop. So I've just been investing a lot more into them just because I wanted to obviously be buying for long term, because that's what I plan on doing. And then I did the same thing with Microsoft. I just feel like they have obviously a lot of longevity in my eyes. So I've been investing with them, but I'm still down. Actually, sorry, I'm still up about 3.5%, which is about $43 long term on that front over there too. But long term, I think it's looking good as far as what I'm investing in, what I'm depositing. Let me take a quick look and see what my dividends have done over the last couple of days since the last video. So I do enjoy dividends still. You can see here I got Home Depot for $2.81, VOOG for $2.19, Realty Income for $2.09, and then I'm pretty sure I didn't have 3M in the last video, which was $1.71, and then in case I didn't have Microsoft, I got $2.20 from Microsoft, which also, by the way, they just announced that they were doing a dividend increase, which is what I absolutely love as well. I love hearing dividend increases. So if I go here on Seeking Alpha, let me go to the dividends, go to their dividend news here. So you're going to see right over here that on September 15th, when I got the notification, they increased their dividend by pretty much 10%. So for any shareholders, you go from 51 cents a share to 56 cents a share. Now, that's not like a crazy amount as far as, an extra 5 cents, per share. But for somebody who already has shares in the company, you effectively got a 10% raise for doing absolutely nothing. And obviously this has where's the ex-dividend date? Is November 18th. So whatever you buy up until the 17th of November, you're going to get that new, pay raise, essentially, that new dividend payout. But for me, I personally love that. I think that is so cool to be able to get that kind of raise for doing nothing. I mean, how many jobs have you had that you got a 10% raise and you did no work for it, right? So for me, I'm excited about that. That just gets me really excited to keep on getting into dividends, which also, by the way, keeps up with around their 5-year average, which is 10%. So even though they have a low dividend yield, I know some people kind of get upset about that, but for me, I look at that with a 10-year growth rate, the 5-year growth rate at 10%. That's just going to help my money become more valuable, plus their growth opportunities. And look at that low payout ratio. Like, that is really good right there. In case you're not familiar, this just means how much of their actual, profit they're paying out to the dividends, which anything under 60% is pretty stellar. So this is really good right here. Just means they have more opportunity to continue to do 5-year growth rates at this level right over here, like 10% plus. And you consider that this is happening during, a time of economic downturn and everything too. So that's pretty exciting, because if we look back last year in September, they did 11% increase. So they're definitely holding on to that same percentage that they were doing year over year, which is always fantastic. But yeah, they did that. And then Johnson & Johnson, we got $1.88. So with all those added in so far for September, we're actually sitting pretty over here. So we're actually at $21.83, which is technically 2 cents higher than August, but we still got a couple more dividends to get paid out for the rest of this month in September. So we're definitely going to go past the August goal, which was, or not goal, but August results, which is fantastic, because this month is usually going to be a little bit better than the month prior, just because of the fact that it's the last month in the quarter. And then you could see for this quarter, we're sitting at a whopping, cut it off, $55.04, which is so great, totaling out $88.55 in dividends thus far in the year, which is obviously something I'm really passionate about when it comes to, getting paid out these dividends and reinvesting in them, because of course I'm reinvesting all of this as of right now because I don't need the money. My goal is to get over $1,000 a month on average, whether I want to keep using that to reinvest or if I want to use that for travel in my 40s, because that's partially the goal that I have there. Now, before we continue on, one thing I want to mention is if you are somebody who has student loans and really high interest, check out refinancing your student loans, because it can save you thousands of dollars. And the best part is it's entirely free to go through the process of refinancing those loans. Now, the nice thing is, all that extra money you can use to invest in the market, pay down extra debt, or do anything else you want in this world with that. Now, if you want to check out the company I recommend, check out the link in these show notes down below to get started. And the nice thing is, there is a little bit of a bonus there for you for using my link, as well as helping support out the channel to continue to provide free content just like this. Now, with that being said, let's get back into the rest of this video. Now, constantly looking at my portfolio, I do it honestly on a daily basis. I keep looking and seeing, what companies are doing well for me. I switched over my VOO ETF to VOOG, and since then it's actually been down. So if I look in here, I can see my average cost is $217 and the current price is $205. So I've been dollar cost averaging on this one quite a bit. If I go into my activities feed here, you can see here I did 25.11 on that one. And then what did I do the day before? Did I do anything on that one? I did about 27.86. So this is going to help lower down my dollar cost average as I keep buying more in while the market is down overall across the board. But not every company I have is under, right? So if I go into my holdings, the cool thing about this is I can actually categorize this by companies with their unrealized gains. So I can see like AT&T, ADP, VOOG, NRZ, all these companies right over here. I'm technically currently under from what I paid for them originally. So if I buy into them now, I'm lowering down my average cost if I still believe in the companies, of course. So I like to do this so that way I can figure out, okay, like right now I am down 6.5% on AT&T. Is it time for me to start buying more in, because my average cost is $30.49, and then see right over here, does it show my average price? Yeah, $30.49. And then right now, let me click on here. They're 28.51. Actually, that's not bad at all. That's a 7.23 dividend yield. That's crazy. So these are the things I kind of debate on. Like, okay, do I go in here and do I keep adding more in here so that way I can dollar cost average, get more value out of it long term? Those are the kind of things that I kind of look for in the opportunities. But at the same time, do I see them coming back? Is that going to be an opportunity there? Or should I put my money into something like Tesla or Apple or Microsoft that have better track records of continuing to go forward? Obviously, Tesla is way overvalued right now. I think let me go in here. So I think their PE ratio is just off the charts right now. So right over here, PE ratio, 244.54. The average that most people look at is around, what is that, like 20 to 30 for a PE ratio, and even then that's quite high. But yeah, that makes it really tough to want to keep on investing more. But then at the same time, if you don't invest and then the market is going up for it, do you miss out all that opportunity? Of course, those are like risks that you have to take, and everybody has to make their own decisions. That's why I never recommend anybody invest the same way I do, because my risk tolerance is different than yours. And yours might be higher or lower, because for me, I have a couple $100 in here, and for some people, if you lose that all, like, is that okay for you, or is that too much for you? Because you have to make those kind of decisions and go forward on that end, because that's kind of how investing is all about. On top of as much as you can do all the research in the world, something can happen and change everything, and you have to be okay with that situation. Obviously, there's a lot of safety nets in some degree when it comes to certain companies, but at the same time, no company is impervious to anything happening. We've seen different companies just tank and go away at some point over time. Some of them are slow and gradual, and some of them are quick and fast. So like, I know one company like the Nikola. So if we go in here, so for like Nikola, you can see here, Nikola. Why am I saying it all weird? So, they hit their peak right over here, and over time they were just going down and down. And, there's obviously some news articles that came out from the CEO. They got phased out just because of all the stuff going on right now. So yeah, he stepped down. So, is that going to hurt the company if somebody invested here at the peak and, they never got back to it? Do you sell? Do you hold? Do you believe in the company? Especially with this kind of company, because there's like nothing on the books, which makes it really, really hard to make a decision on, is this the way I want to go forward? Because there's nothing to gauge. At least with Tesla, even though their PE ratio is off the charts, they have at least something in the books. They are actually profitable for 4 quarters now, if I'm not mistaken. I just watched their shareholder meeting, and they were talking about being profitable for 4 consecutive quarters, even during these troubling times across the board. But that can happen. Or you can have companies like GE right over here. Well, that's not really slow growth or slow. Let me see. Let me go to like the 10 years. So you can see here, like over the years with GE, like it's just slowly going down and down. And I don't know the company well enough as far as like their books and everything, if it's a company that's going to come back or if it's worth it. Obviously, they're getting really close to their 52-week low right over here. But, that's a much slower, downturn than Nikola was. Nikola's much faster. But, sometimes you got to make those decisions on, companies that you have as an example. If we go back here. So if I'm down on AT&T, is AT&T going to come back? Do we just believe because it's such a big company that they're going to be, ones that are going to stick around long term? Or am I going to be, SOL just in general because maybe it won't be able to come back? So those are the kind of decisions we have to make. If you look in a 10-year span, if you bought AT&T 10 years ago, you're up 0.07%. That's not great. So those are things you have to consider. Obviously, they pay out the dividends, and they've been doing it for 36 plus years. So, you're getting good payouts because you're getting 7% on your money. But are you losing out the opportunity on your growth that you have for other stocks like we talked about? Like with this money that I have here, what's my overall value? It's $629. Obviously, I'm down, so that's fine. But if I took that money and I sold off AT&T, and let's say I just bought right back into just Apple and Microsoft, would that be more worth it for me long term because these are going to go up in value much faster than I'll earn that 7% in dividends? Those are the type of decisions I have to make when it comes to holding onto the portfolio, or sorry, holding onto that stock in the portfolio. And honestly, sometimes that's a troubling thing to think about because, one, if I sell now, I'm going to obviously take those losses, which is fine because I've actually sold some stuff for profit this year. So that'll actually kind of help balance out a little bit. So I'm not worried about losing that, what was it? $43.90. So I'm not really worried about losing out on that. Plus, if I invest into Apple and Microsoft at this current time, because they're down 9.7% on my portfolio and almost 3% in Microsoft, if I buy into them now and let's say they get back up to to where they were a month ago, that's 10% right there. I will start making some of my money back already that I lost from selling AT&T. But then I'm not guaranteed. Well, you're never guaranteed the dividend, but the dividend for Apple is much lower than AT&T, so I won't be getting that 7% every quarter. So is that worth it for me? Is that something I want to do? Those are the type of things. So, let me know, honestly, in the comments down below. Should I hold off on selling AT&T and keep it in the portfolio and make those sweet, sweet dividends? Because I do like getting paid those dividends. Or is it going to be better for me to go ahead and sell it and maybe put it into Apple and Microsoft? I'll definitely consider things that you guys mentioned in the show notes or in the comments down below, just to kind of get some more ideas of what other people are thinking, because as much as I love to invest and do this all the time, sometimes having other people's opinions and thoughts can help out a little bit, just to kind of nudge my idea of like which way I would want to go. Because I've had AT&T since the early stages of this portfolio. So if I go back in, let's take a look at my holdings here, or my activities, I should say. And let me bring up AT&T here. And you can see, so I do a lot. Obviously, a lot of times it's just automatic, so I'm not doing that. But if I bring it up from the very first, so June 12th, 2019 is the first time I bought into them. So I've had them for well over a year at this point, which is good because if I'm selling, a lot of what I have is of course going to be at least long-term gains if I did sell, but I'm not going to sell for profit. So that's the first time I bought. It was at $32.17. So since I bought into them, they've been down almost $4 per share. But then I've also earned dividends from them. So let's do this. Let's go ahead and look at just the dividends. So since I've had them, I've earned 1, 2, 3, 4, 5 dividends. And let's just add these all up here. So I'm going to start from the bottom, or actually the top. So it was 17 cents plus 29 cents plus 61 cents plus $1.73 plus $9.85. So I gained a total of $12.65, and then of course the actual holding is down, like what was that, $43? Let me go look again. So 43, let's see here, minus 43.80. Oops, where'd it go? Oh, it just kind of went away there. So I'm actually down $31.15 if you include the dividends that I've earned in the time since I've owned the stock. So that's what I'm technically down if I take all of that consideration in. So is that something I want? Do I want to keep moving? You guys let me know in those comments. But beyond that, as far as how everything else is looking, I'm honestly loving what I'm doing right now. I've put in quite a bit this year so far. Obviously, you could see 2019, I only put in $1,060 because I was just getting started, testing out the app, seeing if I liked it. Obviously, I did, so I kept on investing. So honestly, if you're somebody who's just getting started, I'm just going to show you here for my end. So for deposits, I'm going to switch the range here just to show you. So I started with 100 because that's what you needed. And then you can see here I was doing like 20, 20, 10, 10, 10, 10, 10, 10, 10, all of these right here. So I just kept investing little by little. And then as I got more comfortable with the app, as I started understanding kind of the direction I wanted to take my portfolio, that's when I started doing a lot more. So like 180, 220, 200, all those different deposits are now making a huge impact on my portfolio to get me freaking almost $13,000 as of right now in this account, knowing that long term it's going to keep growing and getting bigger. And for anybody that's getting started, I started off with an ETF, which is essentially just a combination of a bunch of stocks. And then as I started getting more comfortable, then I started breaking into individual stocks and creating these sectors over here. At least on M1 Finance, it allows me to, which if you are somebody who's getting started with M1 or using them and you're kind of wanting this kind of setup, I have tons of videos and tutorials on my other channel where I actually go through the process. So I'll link them in the show notes down below for you. So that way you can learn how to go through that process and go through and understand it all. But overall, pretty happy with how this is turning out so far. Obviously, as the market kind of goes up and down right now like it is currently, I'm going to be buying more in, which you saw a couple more deposits happening on a more regular basis. So instead of doing one deposit a week, I've been doing a couple deposits here and there. So that way I was able to, actually get some buys in the dips over here that are happening in the market and not worry about, if the market goes down, let's say 5% more, because let's see how it ended today. So it ended up positive for me personally. But let's say tomorrow it goes down 5%. I'll buy probably in if it goes down 5%. But then what happens if the next day after that it goes down another 5%? So it just keeps going down. Well, I'm just going to keep on adding more. I'm not going to wait for when, quote unquote, the bottom is going to hit, because I don't know when that is. And I don't want to miss out the opportunities that some of those dips might have, because let me show you here. So like there's a dip and then the market might recover a little bit. A dip, the market might recover. So what happens is, like, if you're having these dips and you're not taking advantage, then you might be losing out to some opportunities, because the whole market might recover like it did as quickly as it did in March. Now, for most people, like I typically mention, is if you're just getting started with investing, get started with $100 into like an M1 finance account and then invest small amounts, $5, $10, $20, $30 a week, or whatever works best for you. But being consistent is honestly the best thing that happened to me when it came to getting into investing and making sure I stuck with it. Now, I want you to keep on learning and growing with your investments, so check out my next video right over here. My name is Dennis, and I will see you in that next video.